So let's get into Hive right now. Hive provides their June update, and here is the information. So they do it a little differently. Obviously, they do the BTC, and then they do the BTC equivalent as well. So we'll cover both here on the screen here. So 278.5 BTC produced. This is from their just strict Bitcoin ASIC miners, and then they increased to 2.24 exahash of Bitcoin mining capacity during the month of June. Here's a little bit down right here, and 2 exahash at the end of June. Some miners were temporarily taken offline and are in the process of being swapped out for higher efficiency miners and layout optimization. We'll take a look at the numbers that I have and which miners, and I would have liked if they would have provided which miners were being taken out or if they're selling them, what's going on, and it would have been kind of nice to know. 6.0 terahash of Ethereum mining capacity at the end of June. Some miners were taken offline temporarily for layout optimization due to high summer temperatures as well. And going down here, and Frank went into a little bit of a tangent about, being a public miner in 2017. So they've experienced crypto winners before, and they've always strived to maintain a strong balance sheet with Bitcoin and Ethereum. And what else did they have here? The company maintains its business as a cash flow positive enterprise without any significant debt, aside from long-term real estate mortgage from Canadian Bank with less than 4% interest, so that's pretty good, and no equipment financing on any of our ASIC and GPU fleet. And then in June, they provided that. We'll get into it. There was something else here. I thought it was kind of him taking a little jab here at the DeFi. Here it is. So this is kind of a little jab here at the DeFi stuff that's going on right now in the space. So we are seeing the great unwind of highly leveraged proof-of-stake fintech companies that represented themselves as modern crypto lending platforms. This unwind is causing selling pressure in the crypto markets at large. We see how the abuse of leverage without regulation, which is endemic in proof-of-stake projects, causes volatility. We believe imprudent crypto cowboys have created a situation akin to the long-term capital management LP crisis of 1998, yet this time without Federal Reserve to bail them out. And I can agree with him. It was just way too much leverage, too many hands changing coins out there right now. So company A, B, C, D, E was going, from one to the other, changing coins, and it just got a little out of hand. Actually, a lot out of hand. So it reminds him of the 2017 during the ICO craze when tokens were being launched only to crash and burn in 2018. So I've talked about this in yesterday's video as well. And the last crypto winter ended February 2019. And these cycles are filled with new innovation and aggressive players. We are cautious, seeking out opportunities, and remain firm in our belief that Bitcoin and Ethereum will survive to thrive again after all of the over-leveraged players are forced out of the business. So we will obviously have to see how this all plays out. NFTs are kind of like ICOs back then. We're seeing the same thing with DeFi. So it's obviously been a tough time for everybody here. All right, now they're BTC equivalents. So 420.8 BTC equivalents. They're about 14 BTC equivalent produced per day on average, and 3.2 exahash of BTC equivalent hash rate. That is obviously a combination of GPU mining and ASIC mining as well for the equivalent of it. Their coin strategy. So during these challenging times in the market cycle that we are experiencing, we remain committed to our expansion plans. These plans will be funded through the selling of our current production of BTC and Ethereum while striving to maintain our BTC inventory levels. So this is obviously really good as well. Darcy, the CFO, stated that. And we are we are able to undertake this strategy and maintain coin inventory levels as a result of keeping a strong balance sheet position and never having entered into any agreements whereby our coin holdings have been staked, put out as collateral, or otherwise put out at risk of being called by another party to cover a position due to the current decline in the price of cryptocurrency. And the CFO obviously taking a little jab here at some of the companies that may have, well, we know that they have taken out loans backed by BTC, and they got possibly margin called on that. So there's a little jab from Hive to the other miners on that one. Difficulty, and that is it. So let's take a look at the numbers, and we're getting real long here. We're almost half an hour in already, I think. We'll try to keep going through this as quickly as possible. So Hive. So there we go. Hive, 83 million shares outstanding. Stock is at 364. Market cap is at 303 million. 9.61% institutionally owned. 136 institutions do own them. The 52-week high was $28, and the 52-week low was $2.82. BTC HODL is at 3,239. Let me zoom this in for you guys. Current value is about 70 million, and their HODL market cap position right now is about 23%. Each share is about at 84 cents of HODL position. And looking at their numbers here, their numbers are down a little bit in June to 420 compared to almost 460. And they would still not, obviously, some of the miners were shut down for relocation and, obviously from the heat. So for optimization, so that obviously contributed to it. And obviously we had one less day in June compared to May. So that obviously contributed to it as well. But if they're mining 14 a day, they would have been at only 434 roughly. If we had that one extra day in here. So they were still below it. Other than that, they have been growing for the most part here every month except for June. June is obviously their oddball month here right now. They did have a little dip here in February as well. Well, February had 2-3 days less than we did in January and March as well. So that's a contributing factor to that. I'm putting them in at approximately 8.4 million in revenue. And that's basically using the end of Bitcoin price for June. If they're using daily price modeling, then obviously it's going to be a little bit different. They're going to be up a little bit higher than that. And that's kind of where our differences may sometime pop up here. We're still obviously, okay, I got to talk about this. We're still obviously waiting on Hive to provide their, I think it's their Q2, which is January, February, and March. I believe that's their Q2. Everybody else is Q1, but I think it's their Q2. We're still waiting, obviously, on that information. They just released information, I think, yesterday that they're going to be delaying it even more instead of possibly sometime in July. Now it's going to be like possibly in August. So here's my little one gripe with that. They've done this before. They've done this last year a couple of times. Each time they've done it, they said they're going to get more staff. They're going to get this under control. They're going to get it to where they have timely reports. So this is my only gripe with Hive is, they've done this before. We know they're eventually going to provide the numbers, but it's just frustrating as investors not having the information there publicly available and, not happy about it. So let me know if you guys aren't happy about it either down in the comments below. I'm definitely not happy about it. It doesn't take 6 months to get financials out. It's pretty simple. I know that they're in different jurisdictions and in different countries operating. And then once they get into the U.S., they're going to say now they have different, more headaches. It shouldn't take you more than 60 days possibly to get all this information done. You may need to hire some more people to get it done, but get it done. I think it's only fair to your investors to get that done. So that's my 2 cents on that. All right. We covered this. They did sell about 367 Bitcoin or BTC equivalent in the month of June. They still obviously are hodling quite a bit. And that's netted them about 7.3 million, about 8 million roughly, depending on when they sold it, at what prices and everything else. But we're just using the end of June price on this. So overall, I'm not complaining about it. They still grew a little bit here from 2.18 exahash to 2.24, slight increase of about 60 petahash. Is that right? Yeah, about 60 petahash or so on it, which is fine. They installed about 670 more miners, which is fine as well. And here's what we installed in June. So June, I lowered their Ethereum basically revenue to 2.8 million. And then we had everything else running at 30. And then except for these miners here, the 90 terahash that were installed, 670 were installed. We had those at 10 days roughly running to get us to that special number of 8.4 million. June, yeah. 8.4 million in June. Is that what I have here? Just double checking. Too many numbers. 8.4, yep. Okay, so we're good. So that is good. We're at 8.4 million right there. Based on all of these. So they still have a lot of miners to get installed. They're obviously looking for places here in the United States as well to get them installed. And they're obviously still working with Intel to do their own specific miners that they're going to be doing. So there's still a bunch of growth left in them, which is really good to see. And they are right now, oh, sorry guys, I keep going back and forth all over the place. Institutions has increased to 136 from 134 in May. 10.3 million shares are now owned by institutions, so that's 9.61%, which is a nice increase. And we're seeing that with a lot of the miners where the institutions are starting to come back in. So I think that might be a good sign where we may have bottomed, but we won't know for a while. We're still at the same price targets of $14 high low, and we have one strong buy on them right now. Okay, going up here, they are approximately 56% fully operational from future hash rate, and their current average hash rate is about 85 terahash. Oh, and then we were going to look at the miners here. So they do have some 79 terahash miners, some 74 terahash, 87. So I'm thinking maybe these 68 terahash miners, I don't even have them added in here anywhere yet, because they just never provided when those were added in. So I was using other miners to get them in. So perhaps these are the ones that got taken out, possibly, or some of them at least, for some of the newer miners. I just don't know. Other than that, there isn't anything else in here that would be troubling as far as miner speeds. These are obviously pretty low, but not too bad. And then everything else is over 70. So those are still pretty profitable. I mean, not great, but they're still profitable. Okay, going over here. They're currently trading at about a 2 PE right now at 75% net income from gross revenue. We're looking at possibly combined revenue so far for the last 3 quarters and then this quarter at approximately 213 million, which is really good. And we're looking at about 160 million, 75% net income from that. So that's where we're getting our stock price of 385, which is pretty close to where they are right now with a 2 PE. Obviously, if Bitcoin starts going up, we're going to be going up higher. So I would easily give them, a 12 to a 15 PE, depending what we find out with the Intel A6 as far as how much they're going to grow with that. So even at 12, we're looking at a stock price of $23, and at 15, at $28, and if we go to 20, we're looking at $38 for a stock price if things start picking back up with Bitcoin. So yeah, still way undervalued. Still doing a great job as far as getting miners installed, operational wise. That's great. Big gripe is obviously financials. Get the financials out to your shareholders. I think you owe it to them. And hopefully this is the last time that Frank and company has this issue where they just can't get the numbers out in time. But we'll see. Okay, so that's Hive.